Hello, good evening, everyone. Please confirm if I'm audible to all of you.
Hello, sir. Good evening. Yes, you're audible.
All right, okay. So everyone, in the previous session, we discussed a few questions based on the company account, wherein we discussed the questions based on the issue of shares. And as you, all of you have been informed in the previous session that we'll be discussing a new topic in today's class. So this is the new topic that I want to discuss with you. This is forfeiture of shares. All right, so we'll learn about the forfeiture, and we'll also, first of all, as usual, we'll try to understand the meaning of the forfeiture, and then we'll talk about the accounting treatment in case of the forfeiture of share. So let's start. Let's first of all talk about the forfeiture, meaning of the forfeiture of shares. All right, just a moment. All right, everyone. So first of all, forfeiture of shares. Forfeiture of shares. So what is forfeiture of share? Forfeiture of share can be defined as a situation and the allotted shares are cancelled by the issuing company because of the non-payment of the amount against the share by the investors. Let me write down the meaning of the feature of share. Just a moment, and I want all of you to write this down in your notebook quickly. Meaning of feature of shares. Forfeiture of shares can be defined as forfeitures of forfeiture of share is a situation when the allotted shares are cancelled. Are cancelled by the company because of the because of non-payment of non-payment of the subscription amount. Non-payment of the subscription amount by the investor or also call him shareholder. Even after even after the request of the issuing company. All right. So forfeiture is a situation. Forfeiture is a situation wherein company decide to cancel the allotted share in case of the non-payment of the subscription amount, non-payment of subscription amount by the investor, even after the continuous request by the issuing company. So to understand this in a proper manner, let's take an example. Let's suppose company have issued 10,000 shares having a face value of rupees 10 each. Right. And company want to raise this fund. That means if company have issued 10,000 shares having a face value of 10 each, that means by issuing this much share, company wants to raise total capital of rupees 1 lakh. Right? Total fund that company wants to raise from the public is 1 lakh. Now, company is planning to raise this fund in installment, and company have decided that they will be asking investor to pay rupees 2 rupees on application, and on allotment company will be asking the investor to pay, let's suppose, 4 rupees, and on first call company will be asking them to pay 3 rupees, and remaining amount on final call. So company will be raising 10,000, 1 lakh of shares by issuing 10,000 shares of 10 each, and this amount will be collected from their investor on installment basis. That means 2 rupees on application, 4 on allotment, 3 rupees on first call, and remaining amount on the final call. All right. That is what company have decided to do. Now, what happens that one of the investor who have invested in the company, what happened that, let's suppose there was an investor who bought 1,000, or let's suppose he bought 100 shares in this company. He subscribed 100 shares in this company having a face value of 10 each. That means he will have to give 1,000 rupees to the company. Since he bought 100 shares, so he will have to give 1,000 shares to the company. Now, what happens that when company asked him to pay 2 rupees on application, when company asked him to pay, first of all, company will ask him to pay 2 rupees on application. This is called, when application is due, he paid for the application. That means when company made the application due, company also received rupees 2 on application from this shareholder. Let's name him Ramesh. Ramesh paid 2 rupees on application. So company have received 2 rupees on application from him. When company asked him to pay 4 rupees on allotment, that means company made the allotment due by 4 rupees. And he even paid for the allotment as well. All right. So company received the payment of the allotment from him. But when company asked him to pay for the first call, that means when company made the first call due, he did not pay for the first call, not received. Amount not received for the first call. That means he defaulted in the payment of the first call. Anyways, company, after some time, company asked him to pay for the final call. That means final call is also made. Final call is also due. Then again, he defaulted in the payment of the final call as well. Final call is not paid by him. That means company did not receive amount towards the final call from him. So this is what we call This is what he's doing. What Ramesh has done, Ramesh have defaulted in the payment of the first call and final call, even after continuous request by the company. Company made request him to pay first call and the amount on the final call, but he made the default in the payment of the first and final call both. Now, what company will do? Company will now forfeit his share. Company will have to, even after continuous request to pay the first and final call, if he do not make payment within a certain period of time, then company will have to forfeit the shares issued to Ramesh. What does this mean basically? This means company will be cancelling the shares that has been issued to the Ramesh. Forfeit the shares means cancelling the shares that have been issued to Ramesh. Got it? Forfeit means cancellation of the shares issued. How much shares we have issued to Ramesh? We have issued 100 shares having a value of 10 each, for which 2 rupees has been already received on application, 4 rupees has already been received on allotment, but the remaining amount is not yet received. Now there is an important point. If company have decided to forfeit his share, then what will happen to the amount that he have already paid? Whether company will be required to return the amount to him? Yes or no? Whether company will be required to return the amount to him? Answer is no. Since he defaulted in the payment of the first call and final call, and even after various requests made by the even after many requests made by the company, if he do not pay the first and final call, then company is authorized to forfeit the number of shares which is issued to Ramesh, number one. All right, company is free to cancel his share, number one. Number two, the amount of money that he have given to the company, that Ramesh has given to the company on account of application and allotment, need not be returned. Company is authorized to, a company is not responsible to return the amount. Company will forfeit the amount of application and allotment as well, along with the cancellation of share. Amount that he have already paid on application and allotment will also be forfeited by the company. Got it? So the thing that I'm trying to explain is that forfeiture is basically a situation wherein company cancel the already issued share to the investor because of the non-payment or default made by the investor on payment of any installment. It could be default can be in respect of any installment. It can be related to allotment, first call or final call, anything. If investor have made any default in the payment of the allotment, first call and final call, then company may decide to forfeit his share, may decide to cancel his share and forfeit the amount that he have already paid on application allotment or any installment that he have already paid. Right. So this is what we call forfeiture of share. That is what I have written in the meaning as well. Forfeiture of share is a situation when the allotted shares are cancelled by the company because of the non-payment of the subscription amount by the investor or shareholder, even after the continuous request by the issuing company. All right. I hope this is clear, everybody. I hope all of you must have written the definition.
Yes, sir, we have.
Yes, sir.
Now, let's talk about the accounting treatment of the forfeiture of share. If company have decided to cancel the share and forfeit the amount that company have already received on application or on allotment or for any installment, the amount that has already been received by the company, as I told you, company will forfeit that amount. The thing is that what will be the accounting treatment for the forfeiture of share? All right. So there are a few journal entries that we will have to do in case of the forfeiture of share. That I'll be talking about. Let me in fact write that down. We'll cover various. We'll try to understand the fourth feature of share through various examples. But let me just first of all write down the journal entry for you. What is the journal entry that we usually do in case of the fourth feature of share? And I want all of you to write this down. All right. I want all of you to write this down. Journal entry in case of fourth feature of share. And also write one more point here. You will be able to understand this later. But for now, just write this down. Journal entry, journal in case of the fourth feature of share. If shares were issued at par. This journal entry will be done only in case of the shares were issued at par. But if the shares were issued at premium, then there will be different entry. We'll talk about that later. But let's just first of all talk about a simple case wherein shares are being forfeited, which were earlier issued at par value. So journal entry for the forfeiture of share is, you will have to remember it. The journal entry is pretty simple. First of all, we'll debit the share capital account. Share capital account will be debited. It will be debited by the number of shares being cancelled. All right, you will, like for example, in the example that we have just taken here, Ramesh have subscribed for 100 shares. That means on the failure of payment of the final and first call, we will be cancelling 100 shares. So we will have to pass the general entry for feature entry for the 100 share. Now, so share capital account will be debited by the number of shares being cancelled, or you can say number of shares forfeited. So let me write that down. Number of shares forfeited, that means NSF, will be multiplied with the called up value of share. Called up value of share. So what do you mean by called up value of share? Called up value of share means, like for example, in this case, company have asked for application, yes. Whether company have asked Ramesh to pay for the allotment, yes. Company have asked Ramesh to pay for the first call, yes. Company have asked Ramesh to pay for the final call, yes. So if company have asked Ramesh to pay for application, allotment, first call, that means the total called up amount is 10 rupees. Since company have asked for the application, allotment, first call and final. So sum total of 2 plus 4 plus 3 plus 1 equals to 10. That means total called up value is 10 rupees. So basically, if company have called for the 10 rupees, we will be multiplying here with 10. Number of shares forfeited with the called up value. All right, then
Sir, one doubt, sir. What is issued at par?
shares forfeited. Shares forfeited. What do you mean by share forfeited? It means the amount that Ramesh have already paid need to be forfeited. Like as per our example, Ramesh have already paid for the application and for the allotment. That means he have already paid 6 rupees for 100 shares, right? So what we'll do, we will forfeit this much amount because of the failure to pay for the first and final call. We will simply multiply the number of shares forfeited, that means 100 shares as per our example, multiply with the amount already received. amount that we have already received. That means 6 rupees per share we have already received. So we'll multiply that and figure out the value. Like for example, since we have decided to cancel 100 shares, so we'll multiply by 100 into 10. So the total share capital account will be debited by 1000 rupees. And shares forfeited, how much shares are being cancelled? 100 shares, for which we have already received 6 rupees, 2 on application and 4 on allotment. That means total of 600 has already been received. So this will be cancelled. This will be forfeited, sorry. And 2, for installment that we haven't yet received, 2, like for, we haven't received for the first call, we'll write that down to first call. To first call account, to share final, to share first call account, to share final call account. So we haven't received any payment for first call and final call. Value of the first call was first call was of 3 rupees, I guess. Yeah, 3 rupees. So that means number of shares forfeited into amount not received. You need to multiply this with amount which is not paid. Amount not received. Like in case of the first call, 100 into 2. 200 is not received for the first call, and again number of shares forfeited into amount not received. We haven't received any amount for the final call as well. Amount not received. Multiplying 100 into 3, we will get 300. Oh, sorry, 1. Final call was of rupees 1 only, na? So 100 into 1, that will be 100. All right. Make sure that sum total of 6 plus 2 plus 3 should be equal to 1000. I think I'm making some mistakes somewhere. Okay. The first call was of 300. 100 into 3. This was 300. All right. So this is the journal entry for the forfeiture of share. Got it? Am I clear? Let me repeat it again. First of all, share capital account will be debited by the number of shares being forfeited into called up value. Then whatever the amount that has already been received, this will be credited to share forfeited account. Then the coins that has not been paid even after asking the investor to pay, like in our example, it was first call and final call. All right, so this is the journal entry that we usually do in case of the forfeiture of share. There is an alternative journal entry for that as well. We have an alternative as well. You can do the journal entry as well. Like instead of passing this journal entry, you can also write down. Let me write that down for you. First of all, we'll write down capital. What was that? It was share capital account debit. So this will remain same. Share capital account will be debited by the number of shares forfeited, multiply with the called up amount, and this will be, this was only 100 rupees. 100 shares into 10. 1000. 2 shares forfeited, whatever the amount that has already been paid, that will be forfeited in case of the forfeiture of share. That means 100 into 6 rupees has already been paid. 2 on allotment, 2 on application, 4 on allotment. 600 credited. And remaining amount which is not yet paid even after calling, instead of writing down the name of the installment, first and final call, we can simply write down 2 calls in arrears account. 2 calls in arrears account. What will be the calls in arrears amount? for first call, it was 3 rupees. For the final call, it was 1 rupee. So total, we haven't collected 4 rupees on 100 share. That means 400 will be calls in area. This is it. This will be the general entry. So instead of doing the above general entry, like share capital account debit to share forfeited, then the name of the installment for which we haven't received the payment, instead of writing down the name of installment for which we haven't received the payment, we can use two calls in area for that. Instead of writing down the name of the installment, you can simply write down two calls in area. All right. I hope this is clear, everybody. All of you must have written this down.
Sir, your calls in area will be in the credit
You
side.
confirm if all of you have written this down.
Always.
Yes. Anybody want me to scroll up or down? This is the first general entry. You can pass the general entry like this. Share capital account debit to share forfeited to share first call to share final call. Instead, you can also do the general entry like this. Share capital account debit to share forfeited to call the agent. All right. All right. So if it is clear, let's move forward with a new example. Let's proceed further in this topic and let's discuss a question. In fact, let's do a few examples first to give you more clarity about this. This is how we usually receive the payment on issuance of share. Na? We receive some payment on application. Then some payment will be is usually received on allotment, then on first call and second call. This is how we usually receive the payment. First we make the allotment due, then we receive it, then we make the first call due, then we receive some amount for the first call, then we pass the journal entry for the for making second call due, and then investor has to pay second call. Then we make the final call due, and investor have to pay final call as well. This is what usually happens, right? Now, in case investor do not make any payment for any of these installment, like if he paid for the allotment first and second call, but he did not make the payment for the final call. In that situation as well, even if only one installment is due, in that case also we will be forfeiting his share. We will forfeit his share. We will forfeit his amount. In fact, we will cancel the share and forfeit his entire amount, that whatever he has already paid to the company on any of the above installments. All right. So let's take an example. Let's try to understand the forfeiture of share through this example. This is not a full-fledged question. This is just a small example. So this we'll be able to understand how actually forfeiture is treated. So this the question says that a company have issued 1,000 shares, having face value of rupees 10 each, able rupees 2 on application, 4 on allotment, rupees 2 on first call, and balance on final call. Mr. X, who was allotted 100 shares, failed to pay final call, and its shares were forfeited past general. All right. So as per this question, it says that number of shares issued by company was 1,000, having a face value of 10 each. That company have decided to receive on installment. Company have thought of collecting 2 rupees on application, and on allotment, company have decided to receive 4 rupees. On first call, company have decided to receive 2 rupees on first call, and balance, as it says in the question, on final call. So what is the balance amount? 2 plus 4 plus 2. Yeah, okay. So 2 rupees is the final call. Total 10. All right. Now question further says that one of the shareholder, one of the subscriber who have been allotted 100 shares, basically who have purchased 100 shares. So he must have applied for the 100 shares, he must have allotted 100 shares, and finally when it comes to the payment of the final call, his shares were forfeited because he failed to pay the final call. So that means he must have paid for the application, for the allotment, for the first call, but he just did not make the payment for the final call. Like this is the case. Basically, company he paid. Company have already received application money, obviously. Then when company made the allotment due, he did the allotment on time. When company made the first call due, he made the first call payment of the first call on time. Payment regarding the first call has also been received. But when the final call was made, when it was due, it is not paid by the investor, not received. So that means at the time of the final call, he defaulted in the payment. All right. Now we need to pass the journal entry just for the forfeiture of share. Question does not require us to pass the journal entry for the issuance of the share. It just requires us to pass the journal entry for the forfeiture of share. Okay. So keeping that in mind, let's just pass the journal entry in this case. Or if you are writing this, I would recommend that you should write this down. This is example 1. Solution to example 1. Please write this down quickly. If you want to take the screenshot of the question, please take a screenshot of the question as well. It would be better whenever you want to refer back to the question. Done? All right. Then.
Yes, sir.
So this is the solution. In this case, 1,000 shares were issued. On 100 shares, final call has not been paid by the investor who have bought 100 shares. And we need to pass the journal entry for this. All right. Do it quickly. Note this down. Let me know whenever you are done.
Done.
Done, sir.
All right then. Okay, so I'm sure all of you are done. Let's pass the journal entry for the forfeiture of share. As I told you, in case of the forfeiture of share, we will have to pass the journal entry. Just try to remember, because the journal entry is going to remain same. It will be, see, we will be doing the same journal entry in every case. Share capital account debit. Share capital account debit to shares forfeited account, and to which call is going to be forfeited. Which call was not paid. Final call was not paid, no? So we'll just write down the name of the final call. Final call. To share final system. Share final call account. All right, let's write down the value. So as I told you, share capital account need to be debited by the number of shares being forfeited. So 100 shares are being forfeited as per the question. Mr. X haven't paid the final call for the 100 shares. So 100 shares multiply with the called up amount. So how much amount has been called up by the company? Company have called for the application. Company have got the application amount. Company called for the allotment. Company called for the first call as well as the final call. So company asked Mr. X to pay for all the installment. That means called up money will be 10 rupees. All right. So in this case, 100 into 10 will be 1000 account will be debited to share capital account. Then how much he have already paid? He have already paid 2 rupees on application, 4 on allotment, 2 on first call. That means he have already paid 8 rupees in respect of shares being cancelled. So number of shares forfeited multiplied with the amount that has already been received by the company. That means 8 rupees has already been received. So we will credit the forfeited account by 8 rupees. That means this amount is forfeited by the company now. All right. And the final call which is not paid by the Mr. X need to be credited as well. So 100 rupees on final call. Mr. X have defaulted in the payment by 2 rupees per share. That means 200 is not paid by the Mr. X. So this is the journal entry for the forfeiture of share. All right, and you can also write down the narration for this being 100 shares forfeited on failure to pay final call. All right, is that clear, everyone? Or apart from this, instead of passing this journal entry, you can also pass another journal entry as discussed previously. You can also write down share capital account debit will be 1000. To share forfeited account by 800. Everything will remain same, but now instead of writing down the name of the installment for which the payment has not been received, we will use calls in arrear account. $200. This is it. And in this case as well, you can pass the same, you can write down the same narration being 100 shares forfeited on failure to pay final call. All right, I hope this is clear, everybody. And I'm sure that all of you must have written this down. You guys are writing this now, all of you?
Yes.
Yes, sir, done.
Please note this down quickly so that we can move to the next example. We'll do one or two more examples to understand the concept of forfeiture completely. And then we'll move to a full-fledged question. All right, so I'm assuming that all of you must have written this down. Moving on to next question. This will also be an example. All right, so example number 2. This is exactly same as the previous example, but this time I have made some change at the end of this question. Like, let me read this for you. It says company issued 1000 shares having face value of ₹10 each. Payable on ₹2 on application, 4 on allotment, 2 on first call, and balance on final call. Mr. X, who was allotted 100 shares, failed to pay first and final call this time. So, along with the first, he did not pay the final call again in this situation, and accordingly, company have decided to forfeit his share. All right, so everything is same in this question. Only thing is that after the allotment, Mr. X did not make the final payment for the final call and the first call. All right, so for that purpose, we need to pass the journal entry. Solution to Example number 2. Need to pass the journal entry again. But before passing the journal entry, let me just explain this a little. Just see. So what is happening in this question? For 100 shares, investors have paid for application. Yes or no? Yes. 2 rupees has already been paid on application. Then when allotment was made due, he also paid for the allotment. Rupees 4 has been paid on allotment. Then when first call was due, he did not pay first call. 2 rupees was not paid on first call. Neither did he pay final call. It was made due. It was due, but it was not paid. 2 rupees is not paid on allotment of final call as well. So that means total called up value is 10 again. Since company have asked for the application, allotment, first and final call, everything for all the installment payment has been called by the company, but payment hasn't been received for the first and final call. So for that purpose, general entry will be, we'll pass the general entry and write down, as usual, share capital account will be debited. Share capital account will be debited by 100 shares. That means number of shares being forfeited, 100 shares into the called up value. Total called up value is 10 rupees each. So share capital account will be debited by 1,000. And 2, shares forfeited. What amount will be forfeited? The amount that has been already paid by the investor. Amount of two share forfeited account. So 100 on 100 share, investors have already paid 6 rupees. 2 on allotment, 4 on allotment, 2 on application. That means 600 will now be forfeited. 2, can we write down, instead of writing down the name of the installment, can we simply write down calls in arrears? Yes, no? Calls in arrears account. You can also write down to first call to final. I'm just passing a combined entry for both the remaining installment calls in arrears. On 100 shares, 2 rupees was not paid on first call, and 2 rupees was not paid on the final call as well. So total 4 rupees is still in arrears. 400 will be credited to calls in arrears. And again, narration will be same, being 100 shares forfeited on account of failure to pay first and final. I'm sure all of you will be able to pass the narration on your own. Or let me write that down for you. Being all right, everybody. I hope this is clear to all of you. This was
Yes.
example number 2. Done? Everybody have written this down?
Yes, sir.
Done.
Yes, sir, we have it.
All right. So moving on to the next situation. All right, situation number 3. Everything is same in this question as well. Like, again, question is saying that 1000 shares were issued having a face value of 10 each, payable 2 on application, 4 on allotment, 2 on first call, and balance on the final call. And Mr. X, who has applied for 100 shares and on his subsequent failure to pay for the first and final call, his shares were forfeited. Pass the journal entry. Okay. Just a minute. I think that I need to change something in this question. Apart from the first and final call, let's assume for this question, allotment money is also due. Just a minute. All right, so it says that Mr. X, who applied for 100 shares and on his subsequent failure to pay allotment money, first and final call, his shares were forfeited as the journal entry. So this time, he made default in the payment of the allotment, application, allotment, call money, and the final call. First call and final call as well. So let me simplify this question for you. Basically, the solution to example number 3. So it says that Mr. X, who have bought 100 shares, when asked to pay for the application, he paid the application amount on time correctly. But when he was asked to pay for the allotment, he defaulted in the payment of allotment. 4 rupees was not paid on allotment. Neither he paid 2 rupees on first call, even after it was due. Then final call was also made, but he did not pay for the final call as well. So apart from application money, he did not pay any amount. All right, so now we need to pass the journal entry in this situation. Journal entry will be, we'll write down. Yeah, please tell me. Share capital account.
Share forfeited account.
By what amount? Obviously, the 100 shares is being forfeited. Na? The number of shares forfeited with the amount of money called up. The called up amount is 10 rupees. 1000.
Yeah.
Two shares being forfeited. To
share forfeited account.
Share forfeited account. This will be 100 into how much he have already paid. He paid only 2 rupees. Huh? That can only be forfeited. So 100 into amount that he have already paid, which will be 200 only. And to share allotment, account, how much he did not pay on allotment, 4 rupees on allotment he did not pay, 400. He did not pay for the first call as well. Share first call account. $100 into 2, that is 200. And he also defaulted in the final call. This will be 200 as well. All right, this is how we will pass the journal entry. Alternative Your entry can be, you can also pass this. Instead of writing this lengthy entry, you can simply write down share capital account debit,
To share forfeiture.
share capital account will be debited by 1,000 to share forfeited
200.
account. How much? 100 into 2. That means 200. And for the amount which has been called but not yet paid, you can use the term called in arrears. Instead of writing down the name of each and every installment, you can simply write down 2,000 arrears account, which will be 800. Done. This is it. But all right. So I hope this is clear, everybody. So until now, we discussed the meaning of the forfeiture, wherein I told you that forfeiture of share refers to cancellation of the share by the company because of the default made by the investor in the payment of any of the installment. All right. And in case of the forfeiture of share, the amount that has already been paid by the investor, either on application or on allotment or first call, will be forfeited by the company. All right. And this is not required to be returned back to the investor. And investor would not be able to claim back the amount that will be completely forfeited by the company, and the number of shares that has already been issued to him will be cancelled, and now same share can be issued to some other person. Since the shares that has been issued to this person has been cancelled, now company is in a position to issue the same shares to some other company, all right, and raise funds from such person, such other investor. All right, so I hope everything is clear until this point. So let's move forward and let's discuss a question. Now, until now, we were discussing about the examples only. But let's start with a question. Let's discuss question number 23. And let's try to understand what this question is trying to tell us. It says Alpha Limited issued 20,000 equity share of rupees 10 each at par, payable on application 2, on allotment 3 per share, on first call 3 per share, on second and second call 2 per share. All right. So basically, company will be collecting the entire amount in 4 installments. Mr. Gupta was allotted 100 shares as the necessary journal entries relating to the forfeiture of shares in each of the following alternative cases. So Gupta has been allotted 100 shares, but as per case 1, it says if Mr. Gupta failed to pay the allotment money and his shares were immediately forfeited. That means no calls were made for the first and final call. As soon as allotment money is not paid, as soon as Mr. Gupta have defaulted in the payment of the allotment money, company did not wait. Company have just decided to cancel his shares. That is it. That means no call, first call is not due. Final call was not made due by the company. Company have decided to cancel the shares immediately as soon as the allotment money is not paid. All right, so let's discuss this question. Let's solve this question. So all of you, I want you to take the screenshot of question number 23. Quickly take the screenshot of the question 23.
Yes, sir, we have to.
Done.
And we will be discussing case 1 only first, and then case 2 and case 3. All right, so I'm assuming that all of you must have taken the screenshot. Just a minute, give me a moment. Solution to question number 23. So as this question says, number of shares issued was 20,000, but Mr. Gupta, regarding the Mr. Gupta, says that Mr. Gupta has been allotted 100 shares, for which Mr. Gupta did not pay the allotment money as per case 1, and his shares is being immediately forfeited. So first of all, number of shares forfeited. You tell me how much share we need to forfeit. 100 shares only, right? Since the default was made by Mr. Gupta only regarding the payment of the allotment money. And what were the installment by which company want to raise the fund? Company have decided to raise fund on application, on allotment, first call, and final call. And company have received, in fact, company fixed the application amount as 2 rupees, fee for allotment, and for first call it was fixed at 3 rupees. Sorry, just a minute. Yeah. And balance was on final. So company, when the application was due, Mr. Gupta paid the application money, but when allotment was due, it did not pay on allotment. And company immediately decided to cancel the share. That means first and final call was not due. First call was not due, final call was not due. Company did not even ask for the first and final call. All right. So that means the total called up value will be, called up value was only 5 rupees. Application money was due and allotment was made due by the company. That means total called up value was 3 rupees. Remaining amount was not even called. Company have decided to cancel the shares immediately. So the general entry for this will be share capital account debit.
500.
Shall we? By what amount share capital account will be debited? Number of shares being forfeited, that is 100.
100 multiplied by
Into called up value. Called up value is only, yes, 5 rupees. 500. Two share forfeited account.
200.
So since the application money is only paid by the investor, Mr. Gupta, the company will be able to forfeit 2 rupees on application only. 100 into 2 that has been paid. 200. And the calls in area will be for the allotment only. So you can write down to share allotment. Or else you can also write down to share to calls in area. So let me write that in fact. To calls in areas account. How much is an area? Only 3 rupees are in area because first and final call was not even made. So only 3 rupees were in area, 100 into 300. And you can write down the narration on your own, being 100 shares forfeited on failure to pay allotment money. All right. I hope this is clear, everybody. So this was which case? This was case A. This is case first. All right. I hope you must have written this down. Done now, everyone? All right then. So let's talk about case number 2. Case 2, in case 2, it says if Mr. Gupta failed to pay allotment money and on his subsequent failure to pay the first call, his shares were forfeited, what will be the Learnivio? So as per case 2, allotment money is also not paid and first call is also not paid. That means company asked him to pay allotment as well as the first call money this time. And as soon as the first call money is not paid by the Mr. Gupta, company have decided to forfeit the shares. All right. So I hope you understand the question. So let's do case number 2. I'm just making change here. You will have to write this down again. Case number 2. Write this down quickly. In this situation, what happens? Company asked for the application money, company received application money. Company asked for allotment, company did not receive allotment. Company asked him to pay first call, he did not pay first call. And then company did not ask for the final call. Neither company received finally. All right. So considering this, we need to pass the journal entry. So the journal entry in this case will be, this time share capital account will be debited. Let me erase this. So this will be share capital account debit. 100 share being cancelled, so 100 into total called up value. This time company has called for the application allotment in first call. That means total called up value is 8 rupees. So this will be 800. And share forfeited. What amount have been share forfeited? What amount will be share forfeited by the company? Only 2 rupees have been received on application. So that means company can forfeit only 2 rupees. That is 200. What amount is not received by the company? Company did not receive for the allotment and first call. So what about final call? The final call is not even made. 100 into 6. All right, so that will be 600. This is the solution. And the ratio will be 100 share being forfeited on failure to pay allotment money and first call.
The same entry, right?
Please write this down quickly. Done, everyone? All right, so I hope all of you have written this down. So I just solved 2 cases for you. And third one will be a homework. Kindly take the screenshot of the question. We won't be discussing this question right now. If you, we won't be discussing case 3 right now. I'm giving this as a homework to you. I'm hoping that you'll be able to solve the third case on your own. We'll discuss few more questions based on the forfeiture in the next class. So this is it for today's session, everyone. In today's class, we were discussing about the forfeiture of the next able to solve the third case on your own. We'll discuss few more. Please take Right, so I hope all of you have written this down right now. If you, sorry, we won't be discussing case 3 right now. I'm giving this as a homework to you. I'm hoping that you'll be able to solve the third case on your own. We'll discuss few more questions based on the feature in the next class. So this is it for today's session, everyone. In today's class, we were discussing about the feature of share, wherein we understood the meaning of the feature. We understood in which situation, in what situation feature is done, and we understood